Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We're seeing the S&P hold pretty well. A little bit of a gyration across the different indices. NASDAQ did trade down into those support levels. We referenced, we gave you a chart on the Morning Express. We're trying to give some charts here these days to kind of walk you through what we're talking about on the Morning Express. But NASDAQ snap back. It's a little bit in the green right now. You see the Russell lower and the Dow lower. That inflation number, though, that's what really brought a little bit of volatility. Inflation's hot. Producer prices. And we gave you a good rundown on the Morning Express about the producer prices. Those things trickle down to consumer prices. And that big February number, that blowout read on PPI back then, that sort of alluded to the inflation to come. So inflation does not seem transitory, although that CPI number was in line to the slightest bit soft yesterday. But that's because those higher base numbers, and we talked about it. So, inflation still gained 0.3 on that CPI month over month. So listen, inflation's here, and we think the second half of the year, the growth story is going to be there, and it's going to be steadfast. So you can see continued pressure here of the Fed to start to act. But you also have yields rising on their own here at auction. You got 30-year bond auction today. The what was it, 204 I think was the yield on it, but it's pushing prices lower. And the 10-year's given up all that rally from yesterday's really great auction. So you got more supply from the long end. I think it's 20-year next week. So still the supply isn't huge, and we're going to see more supply in the coming months, though, as Washington nails down a different debt deal as well as the budget and whatnot. So the yields, I think, are going to be continuing to rise, and that's going to weigh on gold and silver. Gold's back to the scene on the climb from Sunday night in that 1750 area. It's trading there right now with the dollar. Does the dollar break out? The dollar's at an inflection point. We highlighted the dollar in that chart earlier in the week. 50-day moving average crossed above the 200 and the dollar index. There's a trend line, a longer-term one going back to last year that we're holding above. There's more of a near-term trend line the dollar index is using as resistance. Does the dollar break out this week? Is there a catalyst through the end of the week to do that? And that's going to also weigh on the metals like gold, silver, and platinum. So listen, I think there's at least another wave lower here in gold and silver and platinum. If you were able to catch a better buy earlier in the week, look, make sure to take your profits. I'm looking for a swing lower here at these levels and see how this thing treats at 1725, 1730, and really the catalyst being higher yields, which is lower Treasury prices, and a potential breakout in the U.S. dollar. Now, as for crude, we got near $70, consolidating, good move up. I had an interview with the Traders Summit, Blake Morrow. It's going to post it on our site. Check it out, talking about ways we're playing crude oil, ways we're playing the natural gas space, and some of the option structures and things to do within that. But I remain bullish. The trend is higher, and I think there's good backstops of levels of support in crude oil. So again, check out that interview. It's great stuff on crude oil. And our trade desk is here. If you have any questions on anything, 312-278-0500. And remember, though, futures trading involves substantial risk of loss. It is not suitable for all investors.